Michael Eckstein. Welcome to the ROI Online Podcast.
Hey, thank you for having me, Steve.
All right, Michael. So, as business owners, the folks that listen to this podcast, they're business owners, they're
Yep.
entrepreneurs, they're marketing directors, they're people that are hanging out in these companies that have like 20 or less employees for the most part. And so there's this thing that happens once a year where we have to get taxes done. We have to stop what we're doing and do all these things so that we don't get put out of business by the evil IRS.
Yep.
So why should the people that are listening to this podcast, why should they hang on a little longer and listen to this conversation?
Um, because accountants and your business and the IRS it's a little bit more than just taxes. You know, your business's finances and accounting and all those boring numbers, things that we try our hardest to avoid because let's face it, it kind of
Hmm.
sucks,
Hmm.
right? They're a very important part of your business. And as small business owners, we always talk to clients about, maybe data or, the things they can learn in their business, the things they can learn about their market. But your personal accounting and your taxes and all these things are your personal data. It's an important thing to keep in mind all year, not just once a year when you have to because Uncle Sam made you.
So your company is Eckstein Advisory,
Hmm.
and give us a little backstory of why you went from you had this nagging feeling about you can do so much more for
Hmm.
a business owner, but doing their taxes is nice, helping
Yeah.
them with some accounting is good, but
Yeah.
you were feeling. Help us understand that backstory.
So I did the thing a lot of accountants do. Went to college, took my accounting classes, got the degree, became an accountant. Did tax returns. Well, that's what tax accountants do. There's other kinds of accountants, but that's what tax accountants do. And for years, that's kind of all I did. I did tax returns. I got good at doing tax returns. I, got well known for it, was quoted in magazines, was on podcasts, kind of like this one, and became a highly rated accountant in my area. But I kind of realized that the tax return itself doesn't really help the business. You do it because you have to. I guess it helps keep you out of jail, right? Keeps the
Mhm.
IRS from showing up, but it doesn't kind of help you. You take your tax return and then you just kind of stick it in your drawer and you're like, cool, tax return, right? You never look at it. And even if you did look at it, it doesn't really tell you anything about your business other than what you owe in taxes,
Mm.
right? So there was that. And then I realized that the majority of my conversations with business owners started as tax conversations. They would call and say, oh, Michael, I need to buy a car. Should I buy it in the business? Should I lease it? This, that, the other thing. But that was like the first 10, 15 minutes. I'd give them the answer. And then it was still an hour long conversation about their business. And it was all sorts of questions about their business. I had one tax appointment, 10 minutes of taxes, 45 minutes about websites. I don't know anything about websites. If you need websites, talk to Steve. Like, I'm not your website man. But my clients, the business owners, they needed someone who also understood business that they could talk to about their business. Because right now, the way entrepreneurship is in the US, you don't have that. There is no one to talk to about your business. You can try talking to your spouse or your partner, and they mean well, but unless they're also an entrepreneur, they just don't get it. And you can explain, but they just don't get what it's like. They don't understand the problems. When you go to networking events, you have to have this like facade on that there's nothing wrong with your business because you're trying to win business.
Mhm.
And you don't mention to colleagues because you don't want to seem like an idiot amongst colleagues. You're just like, yeah, I know everything about my business, right? So you end up in this place where there's really no one to talk to about it. And I realized that for a lot of my clients, I had kind of became the person to talk to about it. And I was like, I enjoy this more. It's more fulfilling. I feel like I'm actually helping clients as opposed to tax returns that are just kind of, done because they have to be done. I'm sure my clients like me, but they didn't show up once a year for taxes because they liked me, right? They had to. Um, so I figured, let's make this a thing. Let's actually turn this into its own dedicated service like everyone kind of wants, but no one's talking about.
Yeah, as a entrepreneur, you wrestle. You have to make hundreds of decisions
Mm-hmm.
that impact your financial situation on the fly in the heat of the
Mm-hmm.
battle. Sometimes three or four in one day, and you didn't even get up and when you were brushing your teeth, think that you're going to have to make some very impactful decisions. You just showed up, rolled up your sleeves, and in the middle of the smoke and getting punched in the gut,
Mm-hmm.
you make a call the best
Mm-hmm.
you can, and it's like you don't know exactly who to go to ask. It's like it'd be nice to have a quarterback of
Yep.
your financial situation that you could kind of lean on and help check in and make sure you're making good solid calls,
Mm-hmm.
because they're not all tax impactful,
Mm-hmm.
or maybe they are, and maybe you just don't know.
Mm-hmm.
And that is a weakness or a place that I think most entrepreneurs feel vulnerable.
Mm-hmm. Yeah. Uh, Finances as a whole in the US have kind of been a forgotten subject. Personal finance, business finances, it's never something, we talked about. So when you get into business, you never learned how to run business finances or personal finances in high school and college and your masters and your whatever, you know. There's no kind of, I mean, there are, but there's not many like cool, sexy online courses, how to invoice, you know. There's a million on how to, I guess, direct message on LinkedIn for more leads. But you see the courses. Everyone's seen the courses, right? On sales, on marketing, on fun topics, getting more business. But there's no courses. There's no one teaching how to run your finances, how to invoice better. Because it's not fun, but invoicing better is huge. How to do your accounting. You know, I always say your accounting is your most important tax deduction. You know, your perfect accounting, accurate accounting is better than any sexy tax loophole you got out there. Because at the end of the day, your tax return starts with your profit as your accounting determined it. If you're missing $10,000 worth of expenses, well, guess what? You had $10,000 more income than you should have had, and you pay taxes on it.
Hmm.
And I've seen it. I've seen clients come in with inaccurate accounting. And this happened a year or two ago, actually. A client came in and they had like $15,000 worth of payroll expense. I called him up. I was like, James, I've hung out at your store. There's no way you have $15,000. What happened to the rest of it? It turned out there's an extra $60,000 that went missing. But, maybe if he had a different account that didn't ask that question, he would have paid taxes on an extra $60,000 worth of income, right? These are important topics. They're not fun topics, but it's what separates the great businesses from the okay businesses.
Yeah, I call those stupid taxes. They're these invisible taxes that you're paying
Mm-hmm.
that you're unaware of, that you don't know how to, and innately you don't know how to organize everything.
Mm-hmm.
You know, the default mindset in the entrepreneurship is we're going to scale this thing. We're going to just
Yep.
light a fire. We're going to get this cauldron boiling, and
Yep.
we're going to scale it. But in the meantime, it's just there's elbows and dust and fat lips and scrapes knees in the background,
Yeah.
and it can be quite expensive and
Mm-hmm.
painful and detrimental to an organization when the intent was right, and you're following what everyone's talking about, all the right things to, like you said, get more business,
Mm-hmm.
but it can be a big mess behind the curtains.
Yep. And the best catches up with you. I've seen lots of business owners when they came to me, they wouldn't admit it that they were in trouble because no one wants to admit they're in trouble. But you can tell that they're losing sleep over this issue or that issue, that they're unsure about this part of their finances, they're unsure about, they owe money to the IRS, things you don't want to talk about. But those little things in your finances are keeping people up.
There's a lot of shame
Yep.
associated with messing it up. You got to
Yep.
keep, like you said, you got to keep a stiff upper lip, right? And
Yeah.
yeah, things are good, and we're growing and business is great,
Mm-hmm.
but what's going on in the back room.
Mm-hmm.
So what are like give us like three fundamentals that we could start to at least that 20% might help impact 80% of the clean up the mess that we have yeah in
Okay.
the back
So,
room.
all right. So a few good accounting fundamentals, right, would be one, take your accounting more seriously, right? Beyond it just being great for your taxes and saving you money at the end of the year, which is very, very important. Don't get me wrong. It gives you an understanding in your business that looking at your bank account can't. Look at your bank account, you know how much money you have right now. It doesn't tell you anything about how much money you spent, how much money you're about to spend, money coming in and out. It just doesn't tell you. But when you have your accounting done and it's accurate, once a month you can look at your profit and loss. And I believe anyone can look at their profit and loss and learn from it. And you learn from your business, right? All humans are good at recognizing patterns. It's just part of what's innate in us. You notice when you've driven through 5 green lights in a row. How many times have you driven through a lot of green lights and you pulled over, you look at your partner and you're just like, wow, did we hit all the greens? That's amazing. Or you're in a bathroom and you notice the tiles are out of place. Or maybe that's just me. But we notice patterns just inherently, right? And if you look at your profit and loss 15 minutes every month, you'll start noticing your own patterns, right? So do your accounting, right? And if you don't want to do it, outsource it. You know, Chances are it's a good financial decision to outsource your accounting. Um, After that, I would say take your invoicing a little bit more seriously. Take your cash flow a little bit more seriously. It isn't wishy-washy. It isn't up to, kind of the gods when you get paid, or how your invoicing is or how your cash flow is. You have control over it, right? And the last one, and this one I harp on a lot with my own clients, save more for retirement. It's something no one really talks about in the entrepreneurial community. It's something that we all feel like once I'm successful, once the next big contract comes in, once I have 10 employees, once I have 20 employees, then I'll save for retirement. Oh, I'll sell my business. There's all these kind of excuses, and I'm sure you've heard them. You just hear them all the time. I'll save then. And the problem with saving for retirement and why it's different than other things is, if you're late on your mortgage payment, the bank will let you know. If you're late on your power bill, they're just going to turn it off. Taxes, the IRS will send you a letter. You'll find out something went wrong. If you're not saving for retirement, you're not going to find out till you're 50. And your friends start talking about, oh, when I retire, and you realize, oh, when we're supposed to retire, oh, that's happening now, right? So it's important. And those three things I think are the biggest from a financial standpoint, important things to kind of embrace and do. And I guess a fourth, I'm cheating, I'm doing four. This isn't so much a financial thing, but proper goal setting. If you let your business grow, it'll grow in whichever direction it feels like. And it could grow in a direction you don't want to take it in. You know what I mean? Like you could start in one place and all of a sudden you start getting lots of clients in one direction, in one niche. You don't really want to be in it. You don't enjoy them. They're bad clients. They don't pay enough, but somehow you wound up in it because you just let it go wherever it wanted to go. Your goal was just be bigger. Figure out what you want to do in your business, what you want to do in your personal life, because your business exists to serve you to a certain extent, right? That's why you started it, for a better life. And, keep it pointed in that direction.
I think one of the things I really struggle with is like there needs to be this item of research and development where you're testing new things, you're evaluating things, but that's like this unknown thing that you need to explore. You need to keep your focus
Mm-hmm.
on the road while you're driving, but you also need to be able to carve off a little research and development
Yep.
because things are changing. Things are not staying the same.
Mm-hmm.
What are your thoughts and advice around that?
My thoughts are that you really have to take time to think about your business, not about the client work, not about how to automate something the best, but think about your business. Think about it as almost an outside third party observer. Which direction should it go in? Could I be doing this better? You know, has technology evolved? Maybe if the technology isn't even, related to you, it's good just to keep an eye on it. Like, oh, for example, with an accounting firm, maybe a bad example, but with an accounting firm, let's pretend we're a tax accountant like me. There's
Mm.
other kinds of accountings. There's other kinds of software developments that have nothing to do with me, but it's good to have an eye on it because they'll eventually come to you, right? It's good to know where the industry as a whole is moving. And in this regard with R&D, right, you can only do so much R&D yourself. I really think it's important to network with your peers and your colleagues. People usually think of networking as, winning business. Network purely to win new business. Networking with colleagues is probably just as, if not more important, because sometimes, even though, maybe it's two marketers or whatever, you're different kinds of marketers. They have an agency specifically for one thing, and you have an agency specifically for something else, and they don't want to deal with it, and they like you, so they give you the business, right? So that does happen. But it's also important because they help you keep up to date on the industry, on what things they're doing. I've had conversations with other accountants where I was like, wait, I can do what? You're doing what? It's really, that's how you learn and continue learning about your business. There's a lot of R&D just by knowing people in your industry.
Yeah, that's really good.
Mm-hmm.
I think one thing that really helped me was for a while I would see every business the same, but
Mm.
I read this book, um, and it really helped me understand that businesses go through life cycles.
Yeah.
There's a startup stage. There's the, hey, we're starting to get kind of good at this, and then
Mm-hmm.
then there's getting a prepare to scale stage, and then there's the, hey, the wheels are coming off stage. And I think it's important that when you're talking with your peers or you're doing some of these conversations, that when they tell you what they're doing, that you're make sure that you understand what stage they are in, because
Definitely.
it's very different. If you go with the mindset that they're in when you're not in that stage, it could be set you back.
Definitely. You can definitely get away with certain things. I mean, get away in a bad sense, but you can
Mm-hmm.
definitely make certain demands once you're established.
Mm-hmm.
You know, for example, if you're starting out, to a certain extent, you're at the whim of the client. If they don't want to pay the deposit, and you got to put food on the table, well, I guess they're not paying the deposit, right? Once you're established and things are rolling, you got to say things like that.
Mm-hmm.
There's certain things an established business can do, and there's also certain things that established businesses that can afford nicer software, because that's a reality. There's a difference between the $20 a month software and the $200 a month software. And established businesses with employees and things, they can do things that a small solo operator that's still bootstrapping can't really do.
So for me,
Mm-hmm.
getting all the categories correct, to classify expenses, and
Mm-hmm.
that was a little bit confusing for me.
Mm-hmm.
And to get someone to help you to start and get you could have hundreds of categories, or you could have just 10.
Mm-hmm.
And just getting that clear first, I think, was a big hurdle that was helpful.
Yeah, and your accounting. So I guess let's talk about that a little bit.
Hmm.
When you get modern accounting software, cloud software like QuickBooks Online or Xero or FreshBooks, it comes with intro categories that it just decides this is what 99% of businesses need, right? This is the good enough out of the box.
Hmm.
You can customize it. You can throw in whatever you want. I know, for example, Xero doesn't include software expense as one of its categories, but 99% of businesses today have software expense. So
Hmm.
you go in and you add it, and you're allowed to add in whatever. To a certain extent, you don't want to make it too detailed. You don't want to have a category that's just, you buying coffees at Starbucks for clients. That's maybe a little bit too detailed, but you're allowed to put in whatever kind of detail you want that'll help you understand your business. You know, it's for you to understand just as much as it is for your accountant to do your taxes. It's there for you. If you would like to, for example, one thing I always like to do is split your revenue up into different streams, because a lot of accounting software out of the box just has one number, sales or revenue. But maybe you have four different types of service. Maybe you want to see how much each service is making. You know, maybe, you're a lawyer and you do two or three different things. You do real estate, you know, you do business law, you do tax law, and you want to see how much each type of client is making right on your report. Split that up, or photographer or whatever, right? Split it up into the different categories so you can see, so you can understand, because that understanding gives you something. And just go in, add the detail.
Yeah, I think the first the default mindset that you approach the categorization is tax
Yeah.
oriented or tax centric, right?
Yeah.
But I think there's like this light bulb that goes off on you later. Oh, I can start to segment these expenses to help me see patterns,
Yep.
reveal information to help me make better business decisions. And but I think then it pendulum swings to the other side where it gets too many categories and
Yeah.
too detailed.
Yeah.
So the other thing that starts to be confusing to me is so you're looking backwards,
Mm-hmm.
but you're also wanting to look to the future, right?
Yeah.
But the future is always unknown.
Yeah.
And so
So, yeah. Sorry, you
let's
finish.
talk about that.
Okay. So that has been a hot topic in accounting recently. That accounting as a whole tends to be retroactive. We can look at the data, we can look at the history, we can look at what's happened. There's been a big move, a big push into proactive, forward thinking, and kind of advisory work where not everyone's doing it just yet, but people are thinking about it, that this would be more valuable, more helpful. And it definitely is. And it's definitely something that's happened recently. You didn't used to be able to do that. 20, 30 years ago, before cloud software, the way accounting was done was on desktop software. And if you wanted to do a cash flow forecast, you needed to have like a heavy duty pre done Excel sheet. These Excel sheets were proprietary, only accounting firms had them. And if you could buy one, they were expensive, right? Cash flow couldn't really be done unless you were, forecasting couldn't be done unless you were an enterprise company, right? It didn't exist. But now with cloud software, there's all sorts of softwares that will let you see into the future, whether it's cash flow forecasting or other kinds of proactive reports that 30 years ago accountants dreamed of, that used to cost a lot of money and only enterprise companies could have. You could have what costed, an enterprise company thousands 30 years ago for like $200 max today.
Mhm.
And it's probably even better than it was back then. The technology has become insane, right? And there is a push towards proactive reporting. And if that's something you're interested in, it's something to look for, right? But before you can go into proactive reporting, you need to have accurate accounting because
Mhm.
it does draw your information from your accounting, right? If your accounting is a mess, all your reports are going to be a mess, including the proactive things, right? You can't fix it, you know, and you have to have your fundamentals down, right? One of my big things is, the accounting community has been talking about cash flow forecasting. It's the next big wave in accounting. But if you don't have your actual cash flow procedures down, it doesn't matter what forecasting says. All the forecasting in the world will not fix your crappy invoicing. It's just not gonna, right? So I think those two things are important, but proactive reports are amazing. They're the next step.
Yeah, it's like there's this transformation going from fear-based accounting
Mm-hmm.
to confident business
Mm-hmm.
decision-making accounting.
Mm-hmm.
That's what are the proper expectations of an accountant or a tax? What do we call this person? What do we expect of this
Mm-hmm.
person, right? To move from fear-based,
Mm-hmm.
insecure,
Mm-hmm.
knowing that there's this hidden thing that's going to bite you if you get
Mm-hmm.
audited or something, to a place
Yes.
that you can be confident and start to like become become a grown-up business.
So I think there's two things in there. One, your relationship with your accountant, and two, your kind of overall relationship with finances and the IRS, right? Let's start with the second one first, right? The important thing to remember with your finances and the IRS is, they exist. They're nothing to be scared of. You just got to get used to it. The IRS does not want to ruin your life. They really genuinely don't. You know, every single audit I've ever been a part of, their position has just been like, we just want to get paid what's owed to us. They're not trying, to come into your business, kick down the door, and take you to jail. As long as you're being honest, and I think we all know where we're, towing the line. We know what honest is. As long as they're not BSing your expenses and you're being honest, things will be okay, even if you get audited, right? Nothing to be scared of. And the same kind of goes with your finances. It's not something to be scared of just because, someone told you maybe you were bad with money or you're bad with math. It's not true. Don't listen to them, right? Anyone can learn about math and finances and get accustomed to it, right? So that's the first part. The second part is kind of your relationship with your accountant. If you do want that kind of proactive accountant that does more advisory type work, that does more kind of forward thinking work, that will talk to you throughout the year, not the kind of, give me your numbers and get the hell out of my office accountant, right? That's the accountant you have to look for, because not every accountant is like that. And I know we talked about this a little bit before the show, but accountants as a whole were never really taught to be people. We were never taught advisory things, that we were never taught sales. We were just taught you do math. You do math good, right? That was it. That was all our training, right? And a lot of people carry that mentality into their own practices. Their practice just you do math good, right? And when you go in and you talk to your accountant, like for example, if you're listening to this right now and you'd like to have an advisory relationship with your accountant, email them. They may not even be aware that you want that. They may not even offer that, but they may be willing to. Just shoot them an email after this and say, hey, Mr., Mrs., whatever, so and so. I was listening to a podcast. This accountant was telling me about, proactive accounting, advisory. Do you offer that? Right? Because they may and they may not have ever mentioned it, because we're terrible upsellers. It's just a problem in the industry. It's something you have to talk about with them. And if you're looking for a new accountant, when you're looking for a new accountant, you have to think what you're looking for. Is it just tax returns once a year? Or is it a full blown kind of advisory, proactive relationship? Because there's accountants across the board, and not every accountant is going to be everything. Look for the one that, you know, does what you want and that you mesh well with. Have the conversation with them.
Conversation with an accountant.
Mm-hmm.
In my book, I talk about IT guys, and
Yeah.
the reason they became IT people is
Yep.
because they don't want to talk to humans. Okay. They want to sit in a basement. They want that lightsaber over there, and they'll talk to another IT person because they're
Yeah.
on the same level. But to talk to ditzy marketing people, no way. I mean, it's like an insult. It's a waste of their time. And
Yep.
you don't feel comfortable approaching them, but yet we put this weight and they make these declarations about what should happen with your online platform. And it could be totally unbusiness smart. But from an
Mm-hmm.
IT safety point, oh my gosh, it's heavy duty, and even all the hackers couldn't get into it. But as far as helping you grow your business, it's a fail.
Yeah.
I feel that there's an insecurity about approaching and talking to who to talk to. I don't even know what kind of one to talk to. Do you have like this calculator that I would answer these questions and then it would start to reveal, like, I don't know, what are those dating sites that you could get paired with like an advisor that would be perfect for your stage of your business and your goals? That's in depth.
Could you imagine a Tinder for accountants? That would help me a little bit, right? Help my personal life. But um that's the thing. Accountants are similar to IT people, that we want to talk to people on our wavelength, other accountants that understand what we're talking about. But the reality is you're paying this guy or gal, right? On the low end, if you're just paying for taxes, maybe you're paying $1,000, $2,000. On the high end, you could be paying them, significant money. You shouldn't be afraid to pick up the phone and call them. I see it all the time with my clients. They come in, they say, I've had this question for years, but I never felt comfortable asking. Why? You're paying them, to a certain extent. They're there to answer questions,
Well, I think that's an excellent suggestion, but here's the problem.
Mm-hmm.
I don't know whether to believe them or not, because they're talking in this level that they could be telling me the truth and I'm just clueless. I don't know how to evaluate the quality of the answer and if they really considered my situation.
Mm-hmm. So with that, I think you really need to suss out a few different kind of accountants. You know, you wouldn't just kind of hire the first house painter to paint your house. You get a few quotes. You don't hire the first marketer or the first whatever. You get a few quotes. And I find with accountants, more often than not, people just go with the first accountant. Which I mean, I guess that's worked in my favor for a while. That got me where I'm at. But I mean, yeah, go with me, hire me. So the thing is, suss it out. Talk to a few accountants. That is a problem in the industry where we talk in jargon, and I do it sometimes too. There's certain words that have kind of worked into my average daily talk. Like I still say year end. No one says year end. I didn't realize that. I Googled that. That's only an accounting term, right? But there's certain terms that are so like they just perfectly describe something. So we can't help it, right? But some accountants get stuck in jargon mode, right? And they don't know how to talk in normal mode. And maybe that's good for a certain, business owner, very sophisticated, very educated, or maybe it's good for no one, to be honest, right? But find the accountant that works for you. Find the accountant that's on your wavelength that can talk to you how you need to be talked to. That I'm not saying talk down to you. I mean, talk to you on your level, right? That can explain complicated topics to you, right? Because I see that a lot also. Clients will come and their previous accountant never explained anything about taxes, business, whatever, just because they could never explain the concept. All the concepts can be explained, right? Find someone that works for you. Find someone that can be a partner in your business, an ally in your business. Now, how to find them? Is there a Tinder for accountants? There's a few kind of crappy Tinders for accountants. None of them are very good, to be honest. It comes down to a few things. Do you want a local accountant that is nearby you? Then what you're going to end up doing is going through, Google accountants near me or Yelp or whatever, and going through the list and seeing which one of these accounting firms works for me. Which one of these accounting firms treats me right. It doesn't just, I didn't have the sales conversation with the partner and then all my questions go to the associate, because that sometimes happens, right? Find the accounting firm that works for you. Or if you're looking for someone virtual that can be anywhere, then you start looking for niche accountants, accountant for, lawn maintenance, right? Accountant for my industry. Because there are now a lot of accountants that specialize in industries, and certain industries, I think it would be very important to find an accountant that specializes in you, because not everyday kind of stuff. You want more than your everyday accountant.
I've noticed that QuickBooks now is QuickBooks Online specifically is starting to grow a database of approved or certified
Yep.
QuickBooks accountants or managers, whatever that term would be. And I think the industry is recognizing there's demand for it. There's a need for this.
Mm-hmm. Yeah, all the major accounting softwares now have their own directories. QuickBooks, I think they're advisors. Xero also has certified advisors. Gusto has them. Everyone kind of has a bunch of these directories of, oh, they use our software. They've even taken a test, or they have a lot of clients with us, and we kind of can tell you they kind of know what they're doing.
Mhm.
And that is good too, to a certain extent. If you are setting up Gusto, which is a payroll software for those that don't know, and you want help, you would want someone that knows the software. So you go to listing and you find someone that knows the software. But that may not help you if you're looking for a more advisory accountant or proactive accountant, because those certifications are just, they know how to use the software. They don't really say, oh, they know how to talk to people, which is the important thing. And the
Mm.
only way you'll really know is by having the phone call and having the meeting with them and seeing how they are with you.
So what's like one question I need to be asking about this area that I haven't asked that we need to address?
You mean a question you should ask your
You,
accountants?
you. Here we're having this conversation. Is like, what's the one question nobody ever asked that should be asked?
About what specifically?
Yeah, about what area have I not dug around in that you would like to talk about or
Oh,
address that we haven't?
okay. So maybe this is a bad time to talk about it because we have coronavirus.
Mhm.
But one thing I always harp on is saving for retirement. Like I know I harped on it a little bit in the beginning, but it's really something that I feel we're missing right now in the not just accounting community, but the entrepreneurial community as a whole. We're not talking about what happens when we want to retire, right? Um, I think it needs to be taken a little bit more seriously. And I guess I'll tell you a few stories about it, a few horror stories, and what we can do to fix it. A few years ago, I was working late on tax day because at that time I was the kind of guy that did that. I was on April 15th here till like 10 11 p.m. at night filing the last tax returns. I went to the bathroom. I bumped into our commercial cleaner, the guy that cleans the building, and we just kind of got to chatting, talking about retirement. He was a very nice guy. uh, he was in there longer than I had been in that building, right? So at that point, probably 10 plus years, right? And he was older, right? He was definitely near retirement. And we kind of got onto the topic, and it turned out he had never saved for retirement, you know, and he'd always kind of played games with his business, taken cash, reduced his social security tax as much as possible. And he had nothing. He just had to continue working forever. And I know that like as entrepreneurs, we all like to be like, oh, I love working. I love my business. I love my clients. But the reality is, will you love it when you're 75, right? Or do you want to take some time back, take a step back and be able to retire, because relying on Social Security isn't enough. And the reality is, the majority of businesses can't be sold or aren't really worth that much. If you think about how much you need, if you need $50,000 a year, for retirement, you know, say 10 years, that's $500,000, 20 years, that's $1 million. Are you sure without a shadow of a doubt that's what your business is worth? You know what I mean? And it's not a fun topic to talk about it, because I guess I'm not talking about from the fun angle where invest in the stock market, you'll make so much money. I'm talking about it from the more depressing reality of it.
Mhm.
But it's important, start today. Like they say, the best time to plant a tree was 20 years ago. The second best time is today, right? Take it into consideration, set some money aside, you know, even a little bit is better than nothing. Because I really hate seeing these clients that come in and they work so hard. They care about their clients, their employees, their business, the quality of their work. They care about everything, but they didn't care about themselves, you know, and now they're kind of stuck in the situation, you know, and yeah.
That that dictates then that you would do things somewhat different in your business, because if you started that business to have something to show for later,
Mm-hmm.
then you need to create a business that doesn't need you, that would
Yeah.
thrive without you. Well, that means
Mm-hmm.
that there would be these actions you would take that are very different than just you doing the best job and you being integral to the outcome of the service or the product.
Yeah.
So you'd have to create some sort of defined model, business model that's unique and valuable,
Mm-hmm.
that, and then be able to show your business development systems
Mm-hmm.
and your sales systems, so that
Mm-hmm.
when someone's evaluating this business, they could actually imagine them paying for it because
Exactly.
of the established processes and systems that you have created.
Definitely. When you think about selling your business, think about it from the other perspective, buying a business. You would never buy a business where you can't remove the owner, where the owner has everything in their head, where it totally relies on his or her personal, relationships with the network, where the owner is integral to the business, right? You would want to buy a business, like you're saying, with, standard operating procedures, with sales, with marketing, with accounting, with everything is set, kind of plug and play business. And the better all those kind of systems are, the more valuable it becomes, because if you don't have all that, they might buy part of your business. They might buy the lease you're in. They might buy the assets you have. They might buy, your book of business, but they're not going to buy the whole thing. And the less they want to take, the less valuable your business becomes, right? And then even on that note, don't solely rely on selling your business, because things can happen. You know, of course, you want to have a great business like that is sellable,
Mhm.
but always have, plan for the worst, hope for the best.
So, Michael,
Mm.
if folks that have been listening to this, they want to reach out to you and um, chat with you,
Mm.
where's a good place to connect with you?
So I guess this is the part of the podcast where I say go to my website, download my kind of crappy ebook, right? But instead of that, right? You can find me at #Michael.com because realistically, no one's going to remember how to spell my last name while they're on a run listening to this podcast or in the
Hmm.
car, right? #Michael.com, spell it out, right? Because if you just do the hashtag, it doesn't work, right? It takes to my website. And from there, you can just kind of see everything. There's a archive of all the newsletters I've sent. Every week I send a newsletter that's like 300 to 600 words, 300 to 600. And there's an action item for what can help improve your business, the takeaway. Read through them. There's also a link to my LinkedIn. See what I'm saying there. Did you like the podcast? Do you like the newsletter? Do you like all those things? And subscribe. I'm not going to bribe you with some ebook that, doesn't help anyone. It's, make an educated decision. If it's good for you, it's good for you. If not, well, I hope you enjoyed this, right?
Yeah. Or maybe there's someone that you would direct them to if you guys weren't a good fit.
Someone directly to find me.
No,
Right.
so you would suggest someone that might be a better fit for them, even.
Yes. If I think you need another kind of accountant, and this is a serious thing, I'm not going to try and pitch literally everyone that emails me or everyone that signs up for a discovery call or DMs me on LinkedIn. If I think there's a better fit for you and I know who they are, I'll connect you with them. Because the reality is, not everyone's a good fit for everyone else. And as much as I should be here and be like, yeah, hell yeah, I'm the best accountant that's ever existed. The reality is, it's possible there's a better accountant for you, or you need a specialized one, or maybe you don't even need an accountant at all, right? And if that's the case, reach out. I'll see if I can find someone for you.
Awesome. So you've been an excellent guest, Michael. I
Perfect.
really appreciate you.
Thank you for having me.
Yeah.
Seriously.
So Michael Eckstein, Eckstein, actually, yes.
Either's
That's,
fine.
that's such a, you're never confident in that situation either, as far as the proper pronunciation.
The entire name is kind of confusing. Everyone thinks there's an X somewhere in it. That's why I say you should go to #Michael.com instead of Eckstein Advisory. Because, even since I was like a little kid, I remember, I think it was like 5th grade, they misspelled my name over the PA. I was like, oh, there's no X. It's written down in front of you. How do you mess that one up?
That's ECKSTEIN, Michael.
Yeah.
Thanks for being on the ROI Online Podcast.
Thank you for having me.
And that's a wrap.